Welcome back to Real Talk. This is the Real Estate Podcast with the Homefield Group at Royal LePage Heartland Realty. So we've got Rick Lobb. I'm Jeff Bauer, and with us today is Ralph Rubino. He is the owner-operator of Heart to Heart Financial.
That's right.
And he is going to talk to us a bit today about insurance. And he's also a real estate investor in town here. So he has a tenanted property, and we're just going to talk a little bit about tenants and landlords and real estate.
The pros and cons of
absolutely.
investing in real estate.
Yeah, but let's talk about insurance a little bit first.
Sure.
You get the really exciting stuff.
Yeah, start off hot. Yeah, I like it.
Yeah. So what's it like having the most boring job? Just kidding.
It's great. Yeah, you're just talking to people about their morbid things all the time is fantastic.
So let's clarify that the type of insurance that you do is not house insurance. It's not home insurance.
Correct.
You look after life and term insurance. Is that right?
Absolutely.
Okay.
Yeah. So on that note, it's no home and auto. So I stayed away from that industry. There's a lot of great people in Goddard's that I can let you know who to talk to if that's something that you're interested in. But I look after more of the mortgage insurance, life insurance, disability insurance, critical illness coverage, things of that nature. So ensuring that if something happened to you, worst case scenario, that the ones you leave behind are going to be protected.
Okay, so pertaining to then real estate,
yes,
because insurance.
Yeah, that's sort of, I guess, the part of your job that pertains to,
of course,
to the real estate aspect of what we're here for. Okay, so why don't you touch on how your mortgage insurance then, or the package that you would offer would differ? Because I know when somebody is going to get financing, they are offered insurance by the lending institution that they're with.
For sure.
And would it be the lending institution that actually offers the insurance, or is it insurance companies that work with the lending institution?
It's a little bit of both, depending if it's a credit union or if it's a bank. Most of the banks have their own coverage. Credit unions tend to shop that out a little bit more. However, what I do as a broker is I have access to over 40 different companies in Ontario that offer life insurance and mortgage insurance. So the difference being that the mortgage insurance that you're going to see through your lender is going to cover the amount of borrowings that you have. So let's say you purchased a home in Goddard for $250,000, which would be fantastic, but we really don't have that right now.
Impossible.
Yeah, we've touched on that in previous episodes that I've watched, but
so we're talking about fantasy.
That's right. Okay, fantasy. So we'll make it a little bit more realistic around say that $350,000 mark that you were buying a home. If you were to get your mortgage for $300,000 per se, just a nice round number, and you were to purchase that insurance through your bank, and 5 years later you were to pass away, and now your mortgage is only $285,000. You've paid off $15,000 on your mortgage. The bank is only going to give you $285,000. They're going to give you your house free and clear, but you've been paying on $300,000 the entire time.
But why do you care? Because you're dead.
That's a very great question. But the whole reason for paying for it is you want to make sure that whoever you're leaving behind when you are gone is going to be protected. So you could pass away and you were potentially not necessarily the breadwinner of the family per se. And that being the case, the remaining spouse or partner could want to keep the mortgage because it's affordable for them, and they would rather have that money as a lump sum to do other things with, put towards children's education, replace your income in a different way. Maybe you got a great mortgage rate and you know that you don't want to be necessarily allocating those funds.
So if it went through the bank, they're just paying off the mortgage. They're paying themselves back.
The principal.
Exactly. They're covering themselves.
They're paying back their loan.
Exactly.
Whereas your policy, or what do we call that policy versus?
So that would be a term life insurance.
Product.
Policy. Exactly.
So just on a very basic level, this is a life insurance policy that's based on the value of the home.
Exactly. And the difference being is that the mortgage insurance is a set value. You can only get what they're lending you. So if they're lending you that $300,000, you can only buy $300,000.
Right.
Versus when we do a plan and we look over your entire picture, we're going to see, okay, there's additional need to be covered. Say you have a student loan or vehicle financing or credit card debt or something like that you would also want covered. You can buy over and above when you're buying your own personal policy. And further to that, it's usually a lot more affordable, usually about half the price that you would pay.
I remember like when Tess and I got our first mortgage, it was, we kind of knew a little bit about insurance, but we were a lot younger then. We didn't, we just knew our
not
auto
as educated
insurance
as you are now.
Yeah, absolutely.
Right.
And but they just said, okay, yeah, so then you gotta get this insurance too on the mortgage. And they want you have to have an insurance policy on these mortgages. Is that correct?
Not necessarily. It could be a condition that the financing institution could put on, but it doesn't necessarily have to be with them. So you may have to take it right off the hop and just to have something, because we never want to have a gap in coverage. That's the biggest thing, because that's unfortunately when something may happen. So by doing that and educating yourself by watching Real Talk with you guys is a great way to find out that maybe there is another option. And that's when we start looking at the cost and comparisons and seeing like, well, for the amount that you're paying now, you could actually get $500,000 of coverage for the same amount of money as you're paying that you were paying at your financial institution. So there's,
it's interesting that you bring this up, because what people really do need to know is that they need to educate themselves when it comes to things like not only purchasing insurance versus the bank insurance, or life insurance versus the bank insurance. I mean, so often people will have these sort of misconceptions that, well, the lending institution is just going to give them the right advice, and meanwhile, a lot of that advice that a consumer is getting from a lending institution is for the benefit of the lending institution, not the benefit of the consumer.
They're in the business of making it. They're in business, right?
Absolutely.
So when we signed up for our mortgage, they said, "Here, take this insurance policy because you need one." We didn't know there was other options, but we knew that they were saying it. And we kind of said, "All right, well, if we have to, we have to," right? So it definitely is an education piece, and we're lucky to have Ralph here to kind of talk about.
And I've seen both sides. I spent years working at a financial institution. I won't name names, but if you know, you know. But I spent years doing that, so I know how that side of the desk works, and I know what I'm doing now. And my biggest thing right now with any clients that I deal with, prospective clients, existing clients, whatever, is that education piece, letting them know what's out there, because there are hundreds of different options when it comes to insurance, term insurance, permanent insurance, and I won't get into all that detail now, but it just goes to show that there is a lot to be learned from somebody that might actually not necessarily know, and they're just entrusting the person that they're dealing with at their bank.
So if you're buying a house, educate yourself. Don't just go along with what the lenders are telling you.
Exactly. Ask questions.
And I'm not throwing shade at the lenders.
They
have a job to do.
That's right.
But you need to educate yourself in order to get the best deal, terms like insurance, whatever, for yourself.
Right.
Now, Ralph, you're not a mortgage broker, you're an insurance broker,
Correct.
But you would be able to help somebody take a look at their overall kind of financial picture.
Right.
And sort of make a plan on how, this is where I want to be in a couple of years. Let's use an example of a first-time buyer.
Sure.
And they see Real Talk. They're like, okay, I'm going to work with Home Field Group. I just want to get my ducks in a row. Ralph, can you help me make a picture of what this is going to look like?
Absolutely. Yeah. Like on the financial planning side, it is a huge piece, because there's a lot of surprise expenses that you don't realize when you get into purchasing that first home. And I've seen a lot of it through the bank side when we're doing the debt service ratio, which you guys talked about on one of your first episodes, the buying process, where they will lend you a certain amount of your income that you have available to you. They're usually going to try and push that to the limit, because they're going to say, it's like, okay, can you let me know what I'm approved for? And they throw out a number like $500,000, and you were like, I want to buy a house for $250,000.
Yeah.
So
again, fantasy.
Yeah, exactly. Exactly. Well, like we have all of Huron counties.
Yeah, that's right. That's true.
We'll get outside of the scope of Goddard's, but absolutely. So what goes into that plan is something that I really like to do. First-time homebuyers especially, is getting them used to not having those funds. So down payments are key. Having to have that down payment is a major thing. So whether it be savings that you've accrued over time, or you're getting gifted from family, or whatever the case may be, you need to get used to not having those funds. So let's say, just a simple scenario is, let's say the best case scenario is you were living at home and you were saving up for this down payment and trying to find your first home. If you ran the simulations with either myself or with your bank or whomever, and it said, for this amount of mortgage, your payment is going to be $1,500 a month. Get used to every month putting that $1,500, or every 2 weeks, $750, whatever the case may be, putting that aside in a savings account or something along those lines where you can't touch it. Then it's still your money. You still have it saved up for you for that down payment, but further to that, you're used to not being able to spend it.
You're reprogramming your lifestyle.
Exactly. Mortgage amount, taxes amount, an average for heat, average for hydro, things like that. And getting used to it. And then when you get into that place, it's not, oh, now I got to get a roommate to afford this house because I wasn't really prepared. So when I do the financial planning side of it, I definitely get into that, go over the amounts that they're going to be comfortable with, and getting them allocating those funds to certain areas.
Or it's a reality check, and they change what their expectation is, and maybe the expectation does become a roommate or something like that, or they change their lifestyle. Or like you said, the lifestyle piece is such a big part of it when you're planning these things. Is you want your lifestyle to stay the same, right? So you kind of have to adjust one or the other. Save more money or adjust your lifestyle.
Right, exactly. And you just made a great point as to the insurance side of that, is maintaining that lifestyle. So if you're going into this with a partner, you want that partner to maintain that existing lifestyle if you're not there. Right. So that's where that insurance piece comes into play as a major factor, where you're going to have that potentially mortgage free if you were to pass away. And the other side of that I didn't touch on, and we'll kind of go on to like just a brief one about partnerships, is when you have coverage through the bank, through their mortgage insurance, you're covered for one lump sum amount. So that $300,000 mortgage we were talking about, if you both were to pass away, they're not giving you $600,000, right? So they're going to pay off the mortgage and then another $300,000 for your beneficiaries. When you buy a personally owned policy, the way I like to do it, because the cost is so comparable, is getting an individual policy on each life. And if you were both to pass away, then you've got mortgage covered, and then over and above for, your final expenses and, any kids or any estate taxes or anything like that. So there's always that second layer that you won't get out of just a regular lending conversation, that you'll get out of more of a planning conversation.
Okay.
So when you have these conversations with people, like they know, everyone knows they're going to die. Like that's gotta be a difficult thing to talk to people about.
Yeah.
The situations under which they might die and how they might, like, what they're leaving for their loved ones and stuff. So that's gotta be a pretty difficult, and I guess the name of your company, Heart to Heart, that kind of, that's like, it is a conversation, and that's a real conveation that you're having with
Absolutely.
people.
And real talk.
Yeah.
And that's the biggest thing. And that's, for me now, working out of a home office, and having the availability for clients to come to me, but I actually prefer to go to them. Have them in their own surroundings where they're comfortable, their own kitchen table, their island, whatever. And they feel a lot more comfortable having this type of conversation because it is a very real topic that, is unfortunately unavoidable. Yeah. And the biggest
uncomfortable to broach.
Exactly. But by educating them, then when they hit the pillow at night, and they're not like hit the pillow, but when they're going to sleep at night, they've got that peace of mind that, okay, if the worst thing happened, we're at least looked after. The financial side is looked after. I don't get it. I'm not a psychiatrist. I don't get into the emotional side.
Thank God you're not.
Thank God. However, but having that financial side is one burden that's already looked after.
Well, and you were saying beforehand, things are a little different than they were 40 years ago.
Right.
Where if something, cancer rates are higher, but the survival rates are higher.
Yeah.
Heart attacks happen, but most people survive these things. So, when things like that happen, what sort of, like, how do you get coverage for that? Like, because life insurance, you're not dead, so you don't get paid.
Right, exactly. So that's going to be more on the critical illness side. Right. So you're going to see that when you go in and deal with a lender at your financial institution, there's usually 4 quadrants that they talk about, and they kind of just trickle down, and they draw a little house, and they say, okay, you're going to start here and here, and then these are the extras that you want. And then you start thinking, okay, it's like upgrading to leather and upgrading to a sunroof when you're buying a car. Right. But actually, the critical illness piece is almost more important than the life insurance piece, because the likelihood of you passing away from an accident and, in your first time home buyer in that, say 20 to 35, 40 age range, the likelihood of you passing away is pretty slim. It would have to be an accident or something pretty serious. But the likelihood of a critical illness is a lot higher. So you're looking at those percentages that we were talking about, like 2 in 5 Canadians are going to be dealing with cancer in their lifetime. 1 in 7 males, prostate cancer. #Movember when I was doing that. And then further to that, the heart attack and stroke. So like 40 years ago, survival rates weren't near as high as now. More than 80% are going to survive, make it to hospital, go through whatever treatments they need, and then live after that. So the critical illness piece covers you for that instance. So the coverage that I deal with mostly is 25 condition. So everything from heart attack, cancer, stroke, all the way down to severe burns, paralysis, loss of limbs, things of that nature, where if you were diagnosed with something of that sort and you survive 30 days from your diagnosis date, they actually pay out a lump sum to you that you can use to pay your mortgage.
Assist you.
Assist you, exactly. Yeah. Maybe you want to seek outside treatment, something that isn't offered and covered in Canada. So you want to go to China and try something. Well, maybe not now, but not right now. But if you wanted to try something of that sort where it isn't covered by OHIP, you can use those funds. Maybe you have to make a modification to your house,
right?
Putting in a stair lift or
just the general loss of income.
Exactly, right? So the critical illness protection is something that is part of my due diligence. 90+% of my policies that I write for life insurance have a critical illness component built in.
Interesting.
And
are young people receptive to that conversation these days? Like, I mean, would you say the majority of the people that you talk to, especially first-time home buyers, they move forward with the critical illness insurance?
For sure. It's definitely an eye-opener for a lot of people that they're not expecting to talk about. They're expecting to talk about mortgage insurance.
Yeah.
They're expecting to talk about, covering off if they die. But they don't really, it's because it's not out there enough. And that's going back to that education piece. And they are very receptive to it because everyone's got an arm's reach or an arm's length interaction with a cancer or a heart attack or stroke. Me personally, in my own family, I've seen, lots of different, from cancer to heart disease and heart attacks and things of that nature. So I'm a huge proponent of it. And then usually when I start talking about it and I give people my story, then they're like, yeah, my aunt's had this, or my cousin, passed away from this, or whatever the case may be. So people are super receptive to it. And for the price of a night out, like let's say you're going to, Part 2 Bistro or Boston Pizza or something like that, for the price of your dinner, $50 or $40, you can have a pretty good policy for $40 a month that's covering you for life, critical illness, and you've got it all kind of with a bow on
I
it.
guess the next question then would be is how can we change the topic to be not so depressing?
Great question. Well, I get them on a lot. So usually once I place the policy, the spouse usually is like, so if I knock this guy or girl off, I'm going to get that money, right? I'm like, well, as long as you don't get caught, then sure. So that's usually a way that people, usually how we like wrap a meeting up is there's always a joke of some sort. But at the end of the day, it's just that education piece, getting people to know exactly what they've got. And a lot of people think that they're covered through their employer. So that's something that we really didn't touch on, but that's a huge piece just to, that boring book that you get, bring it with you when you go to a meeting. Right. Usually someone like myself or at the financial institution or whatever will know exactly what to look for and say, you do have life insurance through work or you don't, or whatever the case may be. So that's a piece that definitely is needs some attention too. A lot of misconceptions when it comes to work stuff.
So the second reason that we wanted to have you on, and this is me changing the topic.
Sweet segue.
Less,
I like it.
Less depressing.
Hey, this could be depressing too.
Well, I know, you'll find out. So the other reason we wanted to have you on is because you are an investor in real estate.
Yep.
You invested in real estate a number of years ago. You have a tenant in a property, or your landlord a property, and
some would say slumlord, but I'll take landlord. Yeah.
Okay, fair enough. I guess, young guy investing in real estate, what were some of the considerations that you maybe didn't expect, or let's say, what are some of the benefits that you weren't expecting when you decided to invest in real estate X number of years ago?
No, it's a great question. For me personally, it just came down to opportunity. So I had the opportunity to purchase a townhouse in town while things were starting to climb quite drastically. So that was one consideration, was like, I know I'm not gonna, lose my shirt on this investment, right? It's not like buying stocks in, a certain company and just rolling the dice. Like, I'm more so in control of something like this. But a lot of things you don't expect is vetting your potential tenants. So, we live in a great world, depending how you really look at it, but the Facebooks, the Instagrams, the Twitters of the world, that you can actually go in and find a lot about a tenant. Because when you get a application for somebody that's coming to rent your property, they're not going to put a reference on there of somebody that's going to talk bad about
Sure,
them.
of course.
Right? So that's a big piece. And then goes back to Jeff's question about that savings piece and, getting first-time home buyers prepared. It's no different when you're doing it as an income property. So making sure that if that place did have to sit vacant for a month or two,
that you could afford
to have that. So that's all going to play into that debt servicing piece that we talked about. But that's, hot water heater rentals, your gas and your hydro and things like that. But then again, it's like, oh, I need to replace all the smoke detectors every couple of years. There's a couple $100 if
So that's
you're
a
doing the
liability
wired in.
concern for you too.
Exactly. And then, you get as simple as, oh, the last tenant that left holes in the wall, or they had a pet, because you can't exclude pets anymore.
Right, yeah.
But as long as you trust the people that you're dealing with, and that's the biggest thing with those face-to-face interactions. Yeah. So you get a lot out of social media, but I get a lot more as to just talking to somebody.
So just to describe the state of let's say Goderich right now, because your unit is in Goderich.
Yep.
If your unit came up for rent today, how long would it take you to find a suitable tenant, do you think? And how many applicants do you think you'd get?
So it depends on where you advertise. So if you do like the Goderich classifieds things, you're going to get a lot of hits really quickly. It gets shared a lot. You get a lot of people tagging because there's so many people that are looking. Kijiji, things like that. So with mine, I actually just had new tenants come in just before Christmas time.
Okay, so
it's
you've
just
dealt with that
very recently. And I probably had 30 to 40 different applicants. Now, I wouldn't say necessarily they were all applicants. I had 30 to 40 tire kickers, essentially. People are saying they wanted to come look at it, whatever the case may be. But then when you come back to them and say, hey, can you fill this application out first? You lose about half of them right away.
Okay.
So I don't necessarily know if that's potentially they found something else or they don't want to go through the whole process. But if you're not willing to put the work in, I'm not willing to put the work in. Right. And it's that give and take, right?
And that's kind of your first indicator that person might not be a great tenant.
Right. Exactly.
Because a great tenant is one that's going to pay the rent every time, one that's going to take care of the property and not damage it, and one that's going to be easy for you to get along with. What else could somebody do if someone was filling out your application and you had a unit for rent? What would a tenant be able to do to make you feel this is going to be a great tenant?
Yeah, that's a great question. So knock on wood, I've had 2 awesome tenants most recently.
4? No, just kidding.
Yeah, out of 4. No, recently my last couple have been great. They've taken care of the property really well, and they're really accommodating. And if there's ever an issue, they just call me, text me like, hey, this light bulb went out, or the door isn't quite sealing, or whatever the case may be, right? But going back to the applicant side, it's mainly just being yourself, being upfront with and filling out the application to the best of your ability. So don't leave off, the references point. Don't leave off where you're moving from and how often you've moved. Just be upfront. Let the landlord know exactly your situation, because if you're transparent, then they'll be transparent. Right, yeah. Say, I've got 6 people that are coming through this house today to look at it.
Yeah. And is it fair to say that you could identify an authentically written application versus somebody who's trying to hide something or something?
Yeah,
is it fairly obvious?
It is fairly obvious. There is a good chance that somebody could pull the wool over your eyes. There's, people can, make any sort of claim that they wish, but realistically, it's pretty obvious to see. When you see the numbers, it would make sense. And realistically, just their situation, what they're doing. Are they looking is this a long-term solution for them? And that's going to be dependent potentially based on age. Is it a stepping stone for them to save up some money to buy a home that comes available in Goderich in that fantasy world of 250,000?
Yeah.
Then, and further to that is just putting all that information on there. There's a pets question. Do you have a pet? Just let me know. I would rather know up front that you've got 2 Shih Tzus that you're going to have in the property versus me coming in, because I'm pretty diligent about going into the property. So I go every 3 months for my liability. So I'm checking the smoke detector, I'm checking the fire extinguisher, I'm making sure that nothing is disconnected and there's no leaks or anything like that, because I don't want any surprises.
Right.
So that's something that I put right in the application, that's something that I'll be doing. If somebody isn't agreeable to that,
red flag. If you're right, it's the same as any relationship, really, a tenant-landlord relationship. As long as there's mutual trust and respect, proper notices, and people are paying on time, then you've found it to be a good experience.
For sure, exactly, and that's the entire thing. And that's something that I've actually talked to both of you guys about previously, is the amount to charge, because so many people don't necessarily know, what should I charge, right? Yeah. You see all these other ads and things like that, and you're not really sure, okay, is mine worth X? So by having, a contact in real estate is a great first step as to, okay, what are properties like this bringing on average? Yeah. talking to other landlords, talking to other people that have properties, and that would be something that, hey, don't rent to this person or whatever. So having that relationship and that network is huge. So I've really tried to ingrain myself into that and talk to different different people that own properties in town and ask them about red flags, what to look for. Basically having this type of conversation, but knowing over and above what your expenses are is the biggest piece. So if you know that your mortgage, your taxes, and if you're choosing to cover utilities, what your expenses are going to be, give yourself a buffer over and above that. Right. And then what I do is I save that money in a separate bank account, and that is my just in case money. The furnace goes on the property, a window breaks, roof leak,
which everybody should have.
Exactly.
And
whether it be a home or
sure.
a rental. Exactly. So, it doesn't take much for a fridge to kick the bucket, and you have to go and spend $800 to replace a fridge.
Right.
So having that, and the benefit of real estate investing right now is the sheer growth in value of these properties. So you're seeing my rent has already increased from my last tenant 2 years ago to now, just to keep up with the market. And then you don't get into real estate investing to give handouts either, right? You're not in that, because you get a lot of people and those applicants that are like, oh, well, I see you have it listed for $1,200. Will you do $900?
Right.
It's like, well, I know what my expenses are, and I know that I physically could do, but I need to make sure that my assets are covered to make sure that this is still a viable business, because it is a business.
It is a business. Yeah. It's an investment, and you don't make those things, like you said, you do it to make the investment fruitful, not
exactly. And for someone like myself, one of the main reasons to get into real estate investing was A, obviously I had the opportunity, but B, was being self-employed. I don't have a pension plan or anything of that nature. So this is my retirement.
Right.
So by having these, hopefully having it filled for the next 20 some odd years, to have that mortgage paid off, once I'm in my retirement phase, that is going to be, I'm going to have my X expenses, your taxes and your and whatever else. But over and above that is all going to be income for myself to offset, hopefully, that I'm not working until I'm 80 years old.
Unless you want to.
Well, you know what? With my business, you could, right? Yeah. That's the benefit of, something like that, where as long as I'm still have my wits about me, as much as they're there either way. Arguable. But as long as they're still there, then you can still do that education piece and letting people know. And I could only imagine how much it's going to change between now and then, right? It's changed enough in the last 5 years that I've been doing it. So, for sure.
One last thing. If you had to choose between a hamburger and a hot dog, which one would you choose?
Well, Jeff, that's a tough question.
It is.
I didn't know that you were going to end with the toughest question.
I know,
today.
It's very difficult.
I'm going to go hamburger.
Okay.
All day long. Cheese, bacon.
Excellent.
Basically everything you got.
Excellent.
Load it up.
Just want to say thanks again to Ralph Rubino from Heart to Heart Financial. Again, we're the Home Field Group at Royal LePage, and this has been Real Talk.
Thanks for having me, guys.
Pleasure.
Thanks for coming.
Absolutely.